What's going on, traders? Welcome to another weekly Forex forecast. And if this is your first time to my channel and you want to try to grow your trading account and learn more about supply and demand, start now by hitting that subscribe button so you don't miss any of my videos. Alright guys, we're going to start with the US dollar here, DXY, and as you can see on the COT reports, there was a huge change. They actually got rid of 9,000 longs, and they weren't even that long before, but they also got rid of a couple shorts too. But their overall exposure, as you can see, is 68% short to 32% long. And looking at the chart, it's coming up to this daily zone right now, or we've already tested off of this daily zone once, and now we are in for the second test. And if you want to look at the 4 hour here, what I was looking for, I said it in the Mastermind Trading Group Discord. I said once, or I didn't say it, but once this zone broke right here and this was happening, I said it looks like the US dollar is good for shorts now, even though, you know, we are in these higher time frame areas of demand on the monthly, weekly, and daily. You know, a 4 hour wouldn't be that bad. So right now, this is technically a zone. You just have to keep in mind, maybe take profits a little earlier based on the fact that, you know, we look at the daily one more time. We are, you know, clearly reacting off of it, and there is some demand a little bit lower at the 89.31 area. But as far as I see, the US dollar still has a lot of downside potential to take place. So, you know, in my opinion, it's still a shorting setup for the US dollar. It's just be careful of the higher time frame opposing areas for your profit taking, and maybe risk a little bit less, considering the fact that, you know, we're in this monthly area up my top left, we're in this weekly demand area as well. But like I've said in multiple videos, if you look at the monthly, where I think the dollar is ultimately headed is to this 86.91 area, so basically 87. So I still think there is some room to the downside. Just be careful of the higher time frame opposing zones. Alright, on to EURUSD. As you can see on the COT reports, they didn't really touch their longs, even though the previous week they actually added 15,000 longs. But this week they added 12,000 shorts, which tells me, you know, as we come up to this monthly area of supply right here, that they are going to be looking to push price to the downside, which could also be happening on the US dollar. We're in this weekly area of supply above, but if you look at the daily time frame here, we're kind of just in the middle between this daily supply and daily demand. We had a nice reaction off of this demand here, and right now, you know, we're kind of in the middle. And this was a trade that I saw that I didn't take because of the holidays, and actually when it was taking place, prices up here, I never had that consolidation away, but there's a nice 4 hour zone that you got a 2-to-1 on right here. It ended up breaking on the 4 hour, so it looks like we're having a momentum shift to the downside. And if this momentum shift does hold, I do expect this daily demand to be removed and maybe pushed down to this area. But ultimately, I think what they're doing is they're going to be adding shorts to push price to this weekly area of demand, which might be a good buy for the euro. So everything's kind of on pause right now. Ultimately, I still would rather be shorting the US dollar than going long. But, you know, looking at the 4 hour, this has been a pretty decent, clean momentum break so far. I want to see another candle close, and then, you know, maybe we can go down to a 1 hour and see if we can't find anything down on the 1 hour. All right, on to the Aussie US dollar, and I just want to keep in mind before we look at the COT reports or the charts, we are in this monthly area of supply on the top left corner, and we are in this weekly area of supply on the top right. So with that being said, we're going to look at the COT reports here, and as you can see, they got rid of 2,673 longs and about 3,000 shorts as well, which tells me they're kind of just holding up price. As far as their long versus shorts go, they're 48% long to 52% short on this pair. So with that in mind, it's kind of a tough situation to gauge. But as far as the daily time frame goes, you really don't have much opposing supply to hold. Pretty high up there. Even though maybe I'll have to go back and look to see if there's any more that I'm missing. But, you know, in my opinion, it's still a shorting the US dollar environment. So, you know, what you could see happen is price to push down here to this 4 hour zone, which might not be a bad buying opportunity. If you look in the 1 hour, I didn't go back and track all my zones, but I had this one mapped out. Looks like there has been a 1 hour momentum shift here to the downside. Ultimately, if this 1 hour gets broken here, I would expect, you know, price to come down to this 4 hour area at the 76 area. which is in this daily area of demand as well. But the only thing to keep in mind is these higher time frames. So if you do get a long position in this area, maybe take profits at like a 1.5 to 1 or a 2 to 1, something like that, based on the higher time frame areas of supply and demand, and the fact that the US dollar is reacting off of daily demand as well. All right, on to the British pound, and something I wanted to point out here is that we're still reacting off of this downward trend line on the monthly time frame. But if you look on my top left and my top right screen, it's the monthly and the weekly. And comparing it to the Aussie dollar, we are right at the higher time frame areas of supply and demand, and right here we're really not. Even though this is selling right here on the monthly time frame, it's looking like it's more clear on the higher time frames. And if you look at the CAUT reports, they actually got rid of 1,700 longs and 2,000 shorts as well. So it's kind of it's a tough call what's going on based on the CAUT reports. But all I know is that we are coming up to this daily area of supply as well. So it's kind of a tough call for sure. If you go to the 4-hour, kind of similar to the Aussie dollar, but I actually like the 4-hour and the Aussie dollar as well. And this 4-hour, I'm not going to call that a test, but I'm basically going to call it a test because it's basically almost came down and wicked it. So as far as the British pound, I don't really see anything I like as of now. We're going to have to keep an eye on the DXY and see what happens. But as far as the British pound goes, I'm not super eager to trade this. Actually, we can update a trend line right here on the 4-hour like this. Boom. Make that a 4-hour zone, 4-hour trend line. So the trends are up, but we are coming up to this, like I said, we're coming up to this daily area of supply, so be cautious of that. And on the lower time frames, I don't really see that much. If you look at the Aussie dollar one more time, this zone looks better to me if you're going to be going short the US dollar on a different pair. So with that being said, keep an eye out on the British pound for these higher time frame areas of supply. All right, looking at USDJPY, CAUT reports, similar to a lot of the other ones, they added 5,000 longs and added 3,000 shorts. So their overall short exposure went from 80% to 76%. And looking at the charts here, we had a continuation of this downward trend line right here. And nice reaction off of this daily supply. I actually talked about how traders are probably going long and they're going to be met by this daily area of supply. So good on me for catching that for sure. I don't like to, not tooting my own horn or anything, but it's nice to know when you shouldn't be buying and then you get proven right. That's all. Winning is great, but that's another great thing too. And looking at the 4-hour right here, not much going on. We're in this daily or 4-hour area of supply. Going down to the 1-hour, don't see much either. Ultimately, I don't feel comfortable buying this pair. I don't feel comfortable buying any US dollar pairs right now. So ultimately, I'd want to see this 4-hour get removed first, or maybe a new 1-hour supply zone created right here to get in short. But ultimately, I'm going to be looking at the DXY to see, exactly what's going on with the US dollar. All right, looking at the USDCAD, they got rid of a lot of longs, minus 22,000 longs, and they added quite a few shorts. I never understood the call reports for the USDCAD. They don't really make a whole lot of sense based on the price chart. But as you can see on the monthly, we're having this momentum shift, so I am expecting some downside movement. I don't plan on shorting just yet because this daily demand was created by the removal of this trend line. Nice push up, reacted off of this daily supply here. But ultimately, if I'm going to be shorting the USDCAD, I want to see this daily demand removed first, since I do think that this daily demand is very strong. Looking at the 4-hour, there is a 4-hour level right here that was responsible for breaking one zone, or actually two zones. No, actually, yep, one zone, sorry. So actually, no, my bad, two zones. This one and this one. So this is a decent 4-hour zone, but like I said, we are contacting this daily area of demand, so it's kind of a risky trade at this point. But momentum is to the downside. And, I am expecting further downside on the US dollar, so it might not be a bad setup. If you are going to take that setup, I'm not advising you to. I'm just saying be careful of this daily area of demand right down below. All right, on to the USD Swiss franc. And if you look at the call reports, they added 5,700 longs and they got rid of, and they added 6,500 shorts as well. So kind of holding price up in the same area in my opinion, but their short exposure actually decreased from 73% to 66%. But ultimately, I do see some more downside. And if you look at the daily time frame, we're kind of trapped in between, supply and demand right here. Looking at the 4-hour, we had a zone that was created because it broke this zone right here. Even though this huge wick is here, I don't really consider that. I want to see what's going to happen here. If this is some nice consolidation away, this zone might have more significance. But for now, in the 4-hour, I don't really see too much going on as far as a shorting setup goes. And we're reacting off of this big area of daily demand, so it's kind of a risky one. If I'm going to be shorting the US dollar, I'd rather be going long on the euro or the Aussie right now, because these pairs aren't really showing a lot of clear it's not really showing a lot of clearness to me, if that makes sense. Ultimately, what I would prefer to go short would be for this zone to be removed, go deeper into this daily area of demand, and which would give me the sign that this daily area of demand right here is going to break. And this is a very big area, so based on the chart, I'm not going to go back. But yeah, ultimately, I'm not a huge fan of this pair right now. If it comes up to this monthly area, I'm definitely interested in shorting up there. As far as the weekly goes, there's not much going on as well. All right, looking at gold, the call reports show they added 11,000 longs again, and they actually added a few shorts as well, 2,623. But looking at the past couple reports, they added 13,000 longs the week before as well. So, it's definitely bullish for me. Coming and reacting off of this monthly area of supply, this weekly or demand, and this weekly area of supply is being removed right now. As far as the daily time frame goes, I don't really see much right here except for this zone down here. Ultimately, maybe the best bet would be for this to break higher, which would create an area of demand here to buy. That's what I'm looking at for now. As far as the 4-hour goes, I don't really go down lower on gold. I mostly trade silver because it's quicker. But as far as the daily time frame goes, yeah, that's kind of what I'm waiting for, a new zone to be created. Hopefully we get a nice rally up with a new zone formed right there on gold. All right, now we are on to oil. They got rid of 5,498 shorts or longs, and they actually got rid of 16,571 shorts, which is pretty bullish in my opinion. Their long exposure actually increased from 81% to 83%. And it's not surprising if you look on the top right screen, this weekly momentum is up. Weekly supply isn't above. So in my opinion, oil is still a buy. Even though we are in this daily area of supply, I do expect this to break with no problem. I talked about it last week, I believe, in the last weekly Forex forecast. But this 4-hour zone, I'm questioning it. I don't mind this 4-hour level. And, there might even be a trap set up here with, stop losses underneath that level. But, the 4706.062 area doesn't look super bad. This zone hasn't been broken yet, so it's kind of nerve-wracking. But I definitely am bullish and looking to go long on oil. I do expect it to be choppy over time, but basically the two scenarios I'm looking for is for price to come down to here. I would buy that most likely with maybe lower risk based on the fact that I'm not so sure about the zone because it closed above this trend line. So either that for it to come back down to here, or a break of that zone, buy right here for a nice push up. Those are the two scenarios that I'm going to be looking for on oil. All right, everyone. Thanks again for watching this week's Forex forecast. If you enjoyed this video, don't forget to hit that like button and hit that subscribe button as well, if you don't mind. I really appreciate all the support. Let me know in the comments down below what pairs you're looking at this week, and maybe we can get in touch and you can send me a chart and let me know what you're looking at. I always like looking at charts. So with that being said, let's have a great trading week and let's make some money. Cheers.